So how low can the bears take this? We have been saying that there were no more dark pools, so that the market had to go find liquidity. And while we don't do flow trading, we do have software that tells us, unusual activity specifically for VIX. And we had said there was a VIX player playing $30 calls. Why would you be paying $30 calls? Why were we getting downside triggers for SPY through our AI algorithm and through the dark pool? We had said that there was no more dark pools up here above 62.93. So any breakdown here, any breakdown below the 10 SMA, we were going to get waterfalls. All you had to do is let it run, let it run, let it run. I had said I wanted to see about a 650 replay. As of the closing here, we're about 655. It looks like Monday we will close, maybe gap down, depending on some folks' margin calls. But the key to the process is make sure that you're taking your wins, you're not fighting trend. We do have a little bit of candle because we're getting a little oversold at 657. And we do have a internal reversal coming in on the lower time frame. So we are a bit oversold. We can hit 650. We can hit 642 would be support on the daily. But again, your goal is depending on where the market recovers. So let's say the market recovers 655 and holds, and then the VIX calms down, you can start taking longs. Remember, don't go long. Don't be buying every day. But if VIX stays above 20, 25, 30, we're going to continue to go down. And I had said there are no more dark pools. We got to go down and get liquidity. Now, it doesn't mean the market won't overreact. We're way deep away from the 10 SMA on all time frames, the daily, the 1 hour, and the 15. So the market is going to have a knee-jerk reaction. So what we're looking for is if 653 holds, you take your long to 655, for example. And then you just run your stop. Don't assume we're going to hit the 10 SMA. Don't assume we're going to go back to all-time highs. Don't assume anything. One trade at a time, one dark pool at a time. Because what will happen is if the market comes up, let's say hit 655, okay, you feel like a hero. But what if a rejection comes back down? You have no idea if it comes back down. You just run your stop loss. If it comes back down, find support again, then you keep doing this, right? You take the bounces if you can, but being mindful that we have no more upside triggers. So all these moves are going to be short covering. Ideally, we want to see something like 660.77, which is a level we had talked about in a previous video that was pretty key, and the 660 becomes support. Then you're looking at taking some good longs back to, I suspect we're going to come back to the 666 area and then keep rolling over because, again, there are no more upside dark pools. We do have a trigger, but we have to test under 650 for the upside trigger to kick in. Again, near term, we're probably going to come back to the 666 area. We don't know if we're going to get a surprise CPI, but be vigilant. Make sure that when you're trading options, if the VIX collapses, you're going to get IV crushed even if you're correct. So this is a time to either do a spread, take futures, which doesn't get affected by the Greeks, or just take shares. If you take shares long here at, let's say 653 becomes support, 655, 657, the market, starts covering this 2.5% drop because every reaction is an overreaction. Again, I suspect we're going to hit 666 or higher. If the CPI is 93%, it's going to be completely unreliable. But if you want to join our team, comment below on any particular ticker or go into the description and click the link below and join us for October.